That all looks good.
Perfect.
So, good to see you.
Yeah, good to see you too. Thank you for participating in this interview. So, just a quick second, taking my questions here. So, thanks again. I have read a bit about your background in teaching and your publications, especially on international business strategy and the one on doing business in Europe. I think it's highly relevant to this topic. Well, fintech internationalization, even if it's not on fintechs in particular. So I'm really interested in hearing your perspective today. So just about my thesis, well, it looks at how fintech startups expand into new markets using strategic and data-driven methods. And basically, I've prepared 13 short questions that should take about 20 to 30 minutes, depends. And well, if you have any questions, please let me know. Otherwise, we can get started.
No, I think that's great. Yes, like we discussed in the email, I primarily come from this as an academic, and having taught and written about this, about internationalization and international business generally. And so I hope I can add some value to the thesis by responding to your questions and giving my opinions, essentially, based on what I've read in the past.
Yes, thank you. So would you mind sharing a bit what you do exactly at FHNW?
So I have done a number of things over the last few years at the FHNW. I'm a lecturer there, and I've worked on a variety of projects related to digital transformation in the most recent years, and the implementation of those technologies in Swiss firms, but also in sports. I've done it all in German. I need to think about the English word in a second. Sports clubs.
Okay.
The most recent project, but focused a lot on SMEs and the digital transformation of small and medium-sized enterprises. Before that, I worked in Amsterdam at the University of Amsterdam Business School, and there I did a lot more on internationalization, international business, in particular in the energy sector. And before that, I worked at Queen's University in Belfast, and there I also was heavily focused on international business strategy, multinational enterprises, etc. So very classic IB kind of issues and researching those and publishing on those topics.
Okay. So I think actually that my school is like the equivalent here in Romandy of FHNW. We're like HES-SO. It's like Western. I don't know how to say it in English, but like West Fachhochschule, but for like Western Switzerland.
Yeah,
And I mean,
I think the schools are equivalent to each other for sure.
Yeah. Yeah, because I saw you had a international business management program, and this is like the one I'm following. So yeah, I think it's more or less like the same things. Okay.
In the curriculum for our I teach in our new curriculum. Students, I teach the international business part of an international business and communications course. Which is really a great module, which integrates those two highly relevant topics or highly related topics to each other.
Okay. Well, thank you for that introduction. Well, if that's okay for you, we can start with the first question. Okay.
Let's go.
So, what key data sources would you recommend for Swiss fintech companies when they evaluate potential international markets?
Yeah, this I actually did a little bit of research this morning to answer this question. And the interesting thing is that fintech is quite a broad category, and there are many different, let's say, subsectors that fintech firms can serve. And so the kind of data that they need will vary by the specific problem that they're solving. Now, the interesting thing is, if we're going to think about it strategically, is where the firm starts in terms of the kinds of data that they need. My inclination would be to say they should look for data that suggests what the market potential is for their products or services internationally. And and maybe just a quick addition here. I mean, I'm not a fintech-focused researcher. This is not my specific subdomain that I pay a lot of attention to. I'm more a generalist in terms of the way I think about or the work I do on international business. It seems to me that fintech firms are serving or solving problems across your traditional financial services sectors. So there is something to do with optimization of processes in financial transactions. There's something around in the insurance market, serving both customers, but also both B2B and B2C customers in the insurance sector. Then there seems to be like a traditional banking sector. And there's also a financial wealth management aspect to what fintech firms are doing. And of course, the specific data that they need to understand, firms in each of those different domains required to understand market potential will vary slightly. But it's going to break down to something around the number, if they're serving B2B customers, the number of financial services firms operating in a market, or if they're serving as well as at the same time the total value of the market. So what is the total turnover in terms of transactions in, let's say, US dollars on an annual basis? Some kind of combination of, for the B2B, for those firms serving B2B customers in terms of number of potential firms that they could provide their solutions to, and the total value of the financial services activity that those B2B customers are addressing.
So
and
that would
similarly
be
for
into
the B2C
the market
customers,
potential.
Exactly. Where the firm should be seeking out what's the market potential for in terms of customers that they could serve, non-business customers. And again, that's going to be about the total financial wealth in a market and its distribution over potential consumers. And that can be more equally distributed or more unequally distributed. So you would have to have a sense of that, as well as the total number of customers in a market. And that for me would be the point of departure for any fintech firm thinking about internationalizing. What's the most attractive market for you from an economic point of view?
And what's the best way to find this information?
I mean, high-level aggregate data you're going to find relatively easy from financial regulators. But also there are all kinds of research companies that keep tabs on what's going on in the financial markets and in specific subdomains. And they should simply, a fintech firm thinking about internationalizing should identify what the most important indicators to them are, and then identify a trusted supplier of that information. Government agencies provide a whole host of data that I think would be interesting. So that's the first place I would go. I would try and get a sense of what the total market size is from a government agency. And then after that, I would look at commercial providers of industry reports. And there are a host of international organizations that also monitor financial markets across a selection or all countries globally. And that might then be a third source of data. I think the point here is that any individual manager will have a different preference in how granular that data needs to be. As an initial step, you first just want to do a sorting, and you want to get a ranking of potential markets that would be attractive. So in anticipation of providing this answer, I did a quick search this morning for the top 20 financial services markets globally. and it breaks down relatively quickly into the candidates you would expect. We've got, if we look at individual countries, we've got the US at the top. Then comes China. Then comes a host of European countries. India's in the mix. Brazil's in the mix. So we've got China, Brazil, Russia's also in the mix. And most of the European countries have something to do. They're all in the EU, except the UK, of course, which is a very important market for financial services. So these are all the most financialized economies, essentially, which makes sense. And then we have Singapore as well, which is pretty high up the ranking. And if you think about the total, and the interesting thing is, if you look at the value of the financial transactions in each of those markets, they rapidly fall away. If you aggregate all the European countries together, collectively they're larger than the value of the US market, but individually they're of course much smaller. On the largest ones are around a third of the value of the US market, or just under. And that already represents a pretty large market opportunity for Swiss fintech firms.
And would you recommend going into these countries, or not necessarily, because it could depend on the market we're targeting?
That's not turned off. This is a really interesting question. So, do you go where the competition already is, or do you decide to go somewhere else? Fintech firms, I suspect, think of themselves as disruptors, and these markets will still be predominantly dominated by incumbent firms. And so I think for most startups or new ventures, like fintech firms still are, that represents an opportunity to have a differentiated market positioning in relation to the incumbent firms. And that may actually give them a competitive advantage in the marketplace. They offer something different. They offer something which is potentially more affordable, but offers more attractive services to the customers that they are targeting. And okay, so that's a little bit how I think about that. And then I also asked myself the question, would it make more sense to go somewhere which is not on the list? And that's where we start to get into the external environment in which these firms are operating.
So exactly about that, I had a question on this specific thing. So how do regulatory and economic factors can shape the market selection strategy for fintechs? Are these to be taken into account? How much?
So we know what the four main motives are for firms to internationalize, right? They're either market seeking, or they're seeking natural resources or strategic assets, so some form of advanced input into their activities. Or they're efficiency seeking, so they're seeking for the optimal location to have operations, so to optimize their processes. So we've known that since John Dunning's 1998 paper was well established, widely adopted in the literature. The interesting thing about fintech firms is for them to operate, they need an environment where they have customers that require their services, which typically require some kind of informed customer, either a business or a consumer. And they also need an external environment that provides the necessary infrastructure. So we're thinking about telecommunications, infrastructure, etc. So the way I right now would think about fintech firms is that they're pursuing market seeking. They're market seeking when they go international, but that they then also need to select markets which give them access to strategic assets that would enable them to operate in those markets. So there's a combination of motives there. And we kind of see that also in terms of, let's think about the Swiss fintech sector. It's relatively concentrated in Switzerland. If you look at where most of them are founded or registered, at least, we're looking at Zug and we're looking at Zurich. It's just proportionate in terms of where they seem to be located. So we have a cluster, and that makes sense because it's a startup environment, but it's also because there are the necessary external conditions for it to be favorable for them to locate there. So that then brings us on to the next aspect of this kind of firm in particular. It's heavily dependent on the regulatory conditions. So financial services are highly regulated. I think the attractive thing about those markets that I mentioned earlier is that they have relatively well-established regulatory environments, which enables firms to judge what's necessary for them to be able to enter the markets and then operate there. And that, of course, is the primary barrier for setting up operations in a new international market, is that regulatory context. The more challenging that is, the more difficult it is for the firms to operate there.
So I imagine maybe that it would be wiser to go into a market that has either similar regulations or less regulations. Because, for example, for a Swiss fintechs to go to the US, they have very different regulations there. So maybe they should first consider Europe. Would that make sense?
Yeah, now we can think about someone else's work, Pankaj Gemawat's work on international strategy, and his idea around why so many firms fail when they internationalize, because they get mesmerized by the market attractiveness that I mentioned earlier. So total size of the market in terms of dollar values and the growth rate of that market. So this is about future potential value that the firm could create and capture in an international market. They don't think about the barriers that would, or the things that would make it difficult for them to operate effectively in that market. So I don't think it's clear cut. I think it's about weighing up what the additional costs are because of the differences in the regulatory environment versus the total market potential. And it's a little bit of a platitude, but I mean, every firm wants to make it in the US market, especially in financial services, because the market is well known in terms of its depth and breadth. So there's a lot of opportunity for firms that can successfully operate in that market. But at the same time, you're right, European markets are attractive because, of course, the European Union has not been sitting on its hands and has been actively seeking to create a single European market for financial services. So there's a cross-country institutionalized integration of the markets. So a shared regulatory framework, and but there is always this interplay between what's being done at the European level and then domestic regulatory requirements. And those aren't always consistent across all the countries. There is still some variation. There's a shared set of rules that everyone plays by, and then there are additional minor needs for adaptation, probably in how the firms operate or what they need to offer to their customers. But yes, the EU is very attractive. So for a Swiss fintech firm, to go back to the kind of language that Gemawat would use, the distance between the regulatory environment in Switzerland and the regulatory environment in the European Union, which is a very large and attractive market for a fintech firm, is much smaller. It's likely to be much smaller than to the US. But the US is going to be a smaller distance in terms of the differences in that regulatory environment compared to China or Brazil. Right? So I read the summary of your research project this morning, And you mentioned the Uppsala model and a variety, and you also mentioned Born Globals.
Yeah.
And so I don't know the fintech sector well enough to know exactly how many of them were born. I did look at a very interesting published report from this year by Lucerne University of Applied Sciences and Arts on the fintech sector in Switzerland. And more than half of them, more than half of the firms surveyed for that study are clearly oriented towards international markets, but also heavily oriented towards B2B or B2B and B2C customers. And that's kind of why I started the way I did in terms of framing the most interesting.
Yeah, I'm sorry, it just got cut for like a
I'm
second.
Yeah.
So
that focus on international markets, because of course the Swiss financial services market is both with consumers and businesses is interesting, but it's small compared to alternatives internationally. So it's not surprising that these firms start in Switzerland in an environment which offers sophisticated. So there's another theory we can get to in a second there, and then are looking internationally to grow, to scale what they're doing.
And in that same report, I think it's the IFZ report, right? On fintechs.
Right.
So I saw that B2B firms, like around 80% of B2B firms are the ones that go international.
Right. Well, that's because they probably start serving those customers in Switzerland. They develop a track record, and then they're a validated supplier of some form of service to the business customer. And the business customer in this industry is highly likely to be internationalized already. And then it becomes much easier for them to internationalize because they're essentially following an existing customer into the foreign markets, which is also a well-established phenomenon for smaller firms in terms of their internationalization. But there's something else which is kind of interesting about thinking about how these firms internationalize, because the Swiss fintech sector could also be analyzed through some of Porter's work from many years ago, right? In the sense that Switzerland represents many of the characteristics that you would expect to enable internationally competitive firms to emerge. There are sophisticated customers, there's a large enough marketplace, there's competition. These things drive innovation. And because of that, the firms that manage to survive in the domestic market are highly likely to be competitive internationally.
Interesting. Yeah.
So Porter's diamond model is what I'm describing there. The country diamond model.
Thank you for that. So I'll just jump to the next question, if that's all right. So it's about what do you think are the biggest challenges Swiss fintechs can face when they try to access and interpret international market data?
I think what the data does not allow the firms to assess is the other institutional dimension which we haven't discussed yet, which is culture. So the regulatory environment is relatively in the countries that I've mentioned so far, is highly likely to be well specified. So the firms can essentially choose to spend the necessary resources to comply with the regulatory environment, and there will be external experts that will be able to enable them to do that. But then there's this other question about culture. And we're talking now about the degree to how novelty-seeking customers are with respect to the kinds of products or services that fintech firms are operating. And I think countries could vary dramatically in terms of the willingness of customers, both business and consumers as customers, in terms of their willingness to try out fintech offerings.
Yeah.
And so that's what the data won't allow the firms to understand. So, well, it depends what data. So the kinds of data that I would suggest that the firms then need to look at is what is the kind of scene in terms of startups or new ventures in those markets, which are domestic new ventures, and how successful do they seem to be in terms of operating there. Maybe they're not offering the same services as the Swiss Fintech firm that's planning to internationalize to that market. But it will at least start to give some kind of indication of the degree to which new ventures that offer alternative solutions for delivering the same kind of financial services outcome will be received, at least in terms of listening to what they have to offer.
Yeah. Okay. So, and you were talking about that culture is difficult to, well, data about culture is difficult to access. So would you qualify like localized data? Would you include localized data in that? Like that would be, for example, data about customer behavior there, or what people really do there that we can't really know. That could be kind of hard to access, right?
That's why I said the best case scenario would be if there is already a new venture scene, a fintech scene in the country, and you can essentially observe the degree to which those firms seem to be making headway or not in terms of disrupting the domestic markets in which they've been founded. In your brief, you mentioned the Uppsala model, right? The Uppsala model would suggest that the best thing you can do here is to incrementally internationalize so that you can learn to adjust to these cultural differences over time. But the literature is really unclear on whether that kind of incremental process or just a big bang rapid internationalization into distant markets really makes that much of a difference in terms of performance. I think that the studies go both directions. And so trying to find examples is probably the easiest way to do it from a distance, and then seeking to find a way to test the waters is the next best alternative. So I remember, let me take an example just out of my personal experience. Many years ago, Revolut was operating in Switzerland, but they weren't operating there directly. They had a local partner. I forget, I think it may have been Credit Suisse, but I'm not entirely sure. That was essentially providing the local bank account number in Switzerland. And that was how they were able to test the waters. Then they withdrew. They didn't. That partnership ended, and but you could still use their services. And then later, now most recently last year, they re-entered the market. So they must have learned something there. They were out of the Swiss market for a while, and now they've re-entered, but they still don't offer Swiss IBANs or Swiss bank account numbers. So that's a regulatory thing. But because of the integration of Switzerland with the EU financial services sector, it doesn't prevent Swiss customers from accessing that banking service.
That's interesting. I have to dive deeper into that. So I was also gonna ask you if you had an example where doesn't have to be a fintech, but just a company in general was able to leverage localized data, so maybe microeconomic data, to successfully enter another market. If you don't, that's okay. But if you do,
I saw that question this morning, and I'm. I don't have an example for you off the top of my head. And I also thought about it this morning. That's a very internal thing inside the firm. And unless there's a case study that is making that explicit, it's going to be very hard to know.
Yeah. course. You have to be like a close experience to know that. Yeah.
I mean, I think what's interesting is you could take, you could return to Revolut, right? And you can think about how they've expanded from the UK. So there are many interesting things that have happened to that firm. So initially the UK was part of the EU, and it was under when the firm was founded, under essentially a single regulatory framework. And the UK votes to leave the EU, so we have Brexit. And this forces Revolut to open up a subsidiary, so that they can operate within the context of the European regulations of the financial services sector. So they I think it's Latvia, where they set up a banking subsidiary, which then serves the EU and Switzerland.
Yeah.
And initially, of course, a whole bunch of customers that previously had UK IBANs, which are more recognizable, or people are were more comfortable with initially, have to now communicate to all kinds of people. Than in Latvia.
Yeah.
Or is it Lithuania? I forget which of the two countries it is. And so their customers go through that. And then over time, as they become more settled and they start getting banking licenses in other countries, they can start offering local banking numbers, IBAN numbers.
Yeah.
So then in Germany, etc., etc. And that, of course, then institutionalizes and legitimizes the bank a little bit more. So you have this kind of adaptation to the local environments that I mentioned earlier, which then makes them more accessible, or increases their legitimacy, or takes away question marks around their legitimacy as a bank. With domestic customers, at least consumers. But there's another aspect to that bank, because I mean, initially they were just a currency exchange. Right. So this idea of incremental internationalization is also in terms of the product portfolio. So their currency exchange allowed them to collect micro. You could suspect, my suspicion is, that their initial currency, their offering of easy, cheap currency exchange for customers in Europe allowed them to collect micro data on the willingness of consumers, in particular, to use these kinds of neobanking services.
Yeah.
And then what's interesting is later they start offering business banking across these different markets. And so they've learned, this is very much Uppsala, and then they've been able to expand their product portfolio.
Yeah, so yeah, very incremental. Very Uppsala, yeah. Yeah, that's very interesting. Well, let me jump off to another question. But would you recommend fintechs to use data-driven tools or methodology to track and adapt to customer behaviors in new market? And if yes, what would these be? So you mentioned Uppsala. Are there any other one that are just methodologies in general, or data-driven methodologies?
Well, I think that the unique thing about digital technologies, and fintech firms are fundamentally digital businesses, is that every digital technology generates data. So if you're a fintech firm and you're not leveraging insights from data, you probably are going to have difficulties competing. This is the fundamental advantage of digital technologies. It doesn't matter what the digital technology is. It has this characteristic that it generates data. And so you have to exploit the insights from that data. And the advantage that you have as a fintech firm is that you can do what every digital business does, which is you can test the waters for new product ideas relatively quickly. Right? And you can also do A/B testing in terms of your marketing strategy. And so these are advantages that fintech firms have over incumbent firms, which are hugely advantageous to the digital businesses that they are.
And so they can use many digital tools, of course, but are there any other specific ones to like track or just adapt to customer behavior? So you mentioned A/B testing, that could be used. Are there any other ones that you would recommend?
I think you, as a fintech firm, as a new venture in that space, you have to have which is now widely known and accepted, this very experimental mindset. Right? You have a core technology platform that enables you to provide a specific set of products or services, and then the idea is that you're trying to understand how best to deliver those to customers, and that's not always going to be clear in the beginning. And you're looking for that product market fit, whether it's a business or a consumer market that you're targeting, that addresses the problems or the needs of your intended customers, and that requires an experimental mindset. And that and sometimes it's just about how you communicate, I think, for these firms.
Yeah, I agree. And from your experience, how important are partnerships with partners could be local financial institutions, technology providers, or regulators for a successful expansion?
I think they're probably essential. So if you're in the fintech sector, you're dealing with customer data, financial data, so it's very sensitive. And immediately you start to face the question about where that data is hosted. And then you also have a technology platform that is used to both generate and manage that data. Technology platform can be centralized or needs to be operating independent, in terms of copies in different jurisdictions or different regulatory domains, in combination with domestic hosting or regional hosting of the data. And this is really interesting from an IB point of view, because this means that it's unlikely that you could think of fintech firms as this might vary between consumer and business customers. Well, I'm not sufficiently informed to know. Probably, my suspicion is probably not. That you're not going to be able to be an international exporter of these services, in the sense that you can have customers all around the world and they basically have financial data with you. It's all hosted in Switzerland, and everything's on servers in Switzerland, and you process it, and then you can serve customers regardless of where they are in the world. It's highly likely that you're going to be forced to host data and your operations domestically, at least within the geographic space that's covered by a specific regulatory regime, which means that you end up with a firm which is essentially multi-domestic. It's a hybrid of some kind, probably. Alain Verbeke, in his textbook that he published with Cambridge a few years back now, had this really interesting category called the multi-centered multinational firm. And I think that pretty much captures this idea very well, in the sense that there are some aspects of the operations of the firm which are clearly hosted domestically, could be regional in the case of the EU, but let's say in individual countries under their financial regulatory environment, but that there's this highly internationally transferable set of firm-specific capabilities related to providing a specific financial service, which is, because it's digital, is going to be highly transferable between countries. You can essentially duplicate it at will. And so it's the regulatory environment that determines what has to be adapted and conformed to the domestic requirements, and the firm then has this ability to transfer what it does to that space. And so that technology part it reflects a global firm, and what Elaine Verbeeke would call an international projector. So it pushes out its capabilities that it can duplicate to wherever they are needed. But at the same time, there's this domestic adaptation in terms of hosting locally, adapting to regulatory requirements within a host location.
So that would be for the partnerships with technology providers. Would you see any other partnerships, or that would be like the most important to you?
I think the clearest place you're going to see this kind of need for other partners is with the B2C products and services. You can see examples of this with some of the neobanks where they don't actually have the licenses to provide, for example, credit cards or loans. But what they have is partners that provide those kinds of financial services within this specific regulatory domain or space, and then they partner with them. And so customers may go through the entire process of applying for a loan, and then when they hit send, the data doesn't stay with that bank, but is transferred to a third party who is actually going to provide the loan, makes the loan assessment, and then transfers that decision back to the neobank. And so that's a relatively low cost, low investment, low commitment way for the firm to expand its product portfolio with a reliable partner across multiple markets in such a way that it meets the domestic institutional requirements, the regulatory requirements for providing those kinds of products.
And so what is the best way to choose these partners? What criteria should be taken into account?
The way we think about this from a conceptual point of view is that these are related and complementary resources and capabilities that the firm gains access to or control of via contractual means. And so the best way to think about this is that these are opportunities that the banks perceive, or that the fintech firm perceives in the market, or maybe it's even a requirement for them to provide something, but it's not their core business. And they would like to offer it to their customers, but it's not something that they would invest significant capital into establishing as an in-house offering, something that they've developed. And that's how they should choose these partners. It's essentially a very classic idea out of management thinking. It's the make or buy decision. Is this sufficiently core to what we do, the value creation that we are exceptionally good at doing, our core value proposition? Or is this something which is complementary, which ideally we would also be able to offer to be competitive in this marketplace, or to take advantage of opportunities in the market, but it's not something that we want to develop a competence in? That's the decision. So we contract that product or service into our portfolio of products and services. However, where it's related to our core competences and what we really do as a company, as our core value proposition, then we probably make it when we own it in-house.
Yeah. And coming back to the methodologies and frameworks that fintechs could use to expand, or just companies in general, are there any other one you would recommend, like a structured framework for them to really expand?
In terms of the strategic approach for thinking about the international strategy of the firms, I think that it's not mentioned in your brief, but it could be extremely interesting, is the idea of the 3A framework of Pankaj Ghemawat. these fintech firms, when they internationalize, are faced with the opportunity or the decision to either adapt what they're doing or to maintain their current offering unchanged and offer it in the same way in the foreign market, which we refer to as aggregation. So the idea is that the firm is aggregating market segments across locations, not changing its product or service that it's offering. Whereas with adaptation, it's serving customers in different markets, but it's adapting the offering to fit those market segments, so it's more attractive.
Okay.
And then what he did, which is really interesting and really extremely useful for Swiss firms, is he added a third strategy, because the adaptation versus standardization or aggregation of Gemowatt is well established in the literature. From this, we get the integration responsiveness framework, and which then proposes another set of categorizations of international businesses, which we don't need to get into. He basically pointed out that the multinational firm in the integration responsiveness framework kind of misses the underlying value creating mechanism of disaggregating the value chain across multiple locations that the multinational firm does, or the transnational organization misses, which is that there's an implied strategy of arbitrage. And so what Swiss firms always have to their advantage when they internationalize is that they can arbitrage a sense of Swiss quality and Swiss trustworthiness. And in the fintech sector, this could be immensely valuable in terms of a home country attribution to the firms, which they can take with them internationally, which is highly transferable, which is the stamp of Swissness. And all of the attributed assumptions about what that means in foreign markets, and this is a strategy of arbitrage. So, I suspect in the European Union, in any of the European markets, fintech firms can probably pursue some kind of aggregation and arbitrage strategy, so they can offer relatively unchanged products or services. Because of the integration of the Swiss financial system with the EU, and they can emphasize Swiss quality, Swiss reputation, Swiss reliableness, trustworthiness, etc. But then when they enter more distant markets outside of the European space, they're probably going to be doing more of an adaptation and arbitrage strategy. And so I think this is a framework which could be extremely useful for thinking about the internationalization of fintech firms out of Switzerland.
Yeah, for sure. So you think Swiss, well, in other markets, for example, in the US or in Asia, wouldn't Swiss fintechs be considered as trustworthy, or like Swiss watches, for example?
They would be. The point is that they would still be able to exploit that arbitrage in terms of Switzerland being perceived as different in terms of its firms, as a general kind of assumption on the part of customers that firms that internationalize out of Switzerland, especially out of financial services, have all kinds of attributions made to them. Generally speaking, positive, I think. And these fintech firms will always be able to arbitrage that difference between the perception of domestic firms and a firm out of the Swiss financial services sector. And there's likely to be some variation there. But they probably won't have to adapt their products and services offering that much within the European space, because they will probably be offering something, well, let's say in the DACH region, so Germany, Austria, Switzerland, it's likely to be very limited in terms of the adaptation that's needed. Then maybe other European countries a little bit more, but it's largely they're aggregating customers. They're collecting together different customers in the European space that they can offer pretty similar service to, would be my expectation. Because the regulatory environment is not going to change that much. I think the regulatory environment will drive a lot of the need to adapt. But as soon as they leave that European space, I suspect that the need for adaptation of the way that they provide services or products, or the attributes of the services or products, is likely to become meaningfully more different than within the European space. And that's why I think that the internationalization strategy for those markets would need to be different. You would need to think about it differently, at least. You could still be offering the same products and services, but you're going to be needing to do more adaptation of the product or service to serve the local customers, possibly because of customer needs and wants, which are culturally driven a little bit, but I suspect mostly because of regulatory requirements in terms of product and service attributes.
Totally. Okay. And so coming back to, well, we talked a bit about that, but are there any analytics tools or data platform that you find effective for guiding market expansion decisions? Should they use that, companies that want to internationalize?
I think that there's a lot of data out for firms to have a pretty good idea of the market potential from an economic perspective. I think thinking about the barriers or the things that might make realizing the potential of that market difficult requires you to engage with people who have experience of that marketplace, especially in something like finance. So I'll go back 10 years to when I joined the FHNW. So I came from a very university background, right? So everything was data-driven. And then for the first time in my life, I experienced doing innovation workshops. So working with people out of practice with experience of the industry and mapping out strategic options, thinking about business model innovation, value propositions, and the like. My suspicion is that once you know which markets you've got in rank order in terms of the total potential economic value of the market and an assessment of the degree to which you think you might be able to have a unique value proposition in that market, assessing the challenges of entering that market is probably going to be most effectively done through something like a we lost each other for a second there. So once we've got the economic assessment done and we've got a ranked list of markets, now we want to assess maybe the top 5 in terms of how difficult it would be to actually set up operations there. So now we're trying to put in some kind of assessment of the degree to which we should modify the market attractiveness because of non-economic factors that are going to make it difficult for us to operate there. And there I think you would be best served by using a diverse set of participants with experience of those markets in a workshop setting, using frameworks like the distance framework of Gemmawatt maybe, or a set of categorizations that are fintech specific as well as financial services sector specific that matter for the operations of firms. And then you put those people in a room and you do a 2-day workshop. And by the end of that, it's not going to be a hard quantified assessment, but you're going to have an expert-driven, experience and data-driven, because they will bring knowledge of the facts with them into the room of the different scenarios that a firm would face for, let's say, the 5 most attractive markets. And on the basis of that, you can probably get a pretty good idea of where you want to decide to internationalize to next.
So that would be something you would include in an ideal framework for internationalization, for the internationalization of fintechs?
Yeah, I mean, okay, let's say, let's make it more concrete, because this is the kind of thing that we would do at the FHNW. A fintech firm out of Zurich decides to not go to a local FR and calls me up and says, Johan, do you think you can help us to decide on an internationalization strategy? So the first thing I would do is I would probably, the first thing I would do is I would write a short brief on a procedure through which they could identify the most attractive markets, like I've kind of intimated throughout this conversation, and then propose the metrics to use to rank the markets for the economic attractiveness. Then what I would probably do is do a workshop with the decision makers in that fintech for, let's say, an afternoon, and just look at those numbers and get their expert input on what's not there and what they can add from their experience and knowledge about the industry and how things work, and maybe some indirect experience of the foreign market in terms of that potential. And then on the basis of combining those hard numbers with their experience and industry expertise, create a new ranking, a revised ranking. And then once we've got the country rankings, because that firm is likely inexperienced in operating in, let's say, the top 5, we make a selection, top 3, top 5. We then purposefully seek out people with intimate knowledge of those markets, ideally more than one. So 1 or 2, it's unlikely that they would have experience of all of them. And then also in terms of different product segments, and you incentivize them to participate in a one-day workshop where you set up a framework that you want to fill out, which is essentially addressing all of the things that could make it difficult to operate there, or that would make, or attributes of the firm and the offering that they have that would make it make them attractive to customers in that marketplace. And so you do this on the basis of some kind of ideation process. And by the end of that ideation process, you have a set of factors that are either negatively or positively going to affect the likelihood that the firm can actually realize a portion of the value that's available to capture in that foreign market. And then it's a management decision after that, right? You've got 3 scenarios essentially, or 5 scenarios. And you've allowed some hard data into that conversation. People might look up data or know of reports and feed that in. But you've also captured the experiential insights about operating in that market, and people get into dialogue. And so the decision makers in the fintech firm can assess the likelihood to which they are able to do what they need to do as a management team to operate in the foreign market. I mean, one of the outcomes might be as well, you need to hire some people in the US, for example, if you want to operate there. So you might rely on external partners to provide technology platforms, and you might transfer your algorithms, and you might adapt your web presence or your app to serve the market initially, but you also need to have a local representative staff in that market that is responsible for those operations, but also understands the marketplace. Maybe for sales, or maybe for talking to regulators. And that kind of stuff you can't really know unless you do that kind of experiential, that discussion of the experiential knowledge about the marketplace.
So that's a very interesting framework.
I have to say, I'm hugely convinced by. There are a few things about taking that approach. Like when you design the workshops, you can't have everyone be the same, right? So the key to making a workshop like that work is that you have a diverse range of people with different experiences in relation to a core focus. So they all have something to do with the focus that you're trying to address, but they come with different perspectives on that focus, different experiences, maybe in this case from different types of products or service sub-markets within the financial services industry. And so you bring them all into the room, and then they complement each other in discussion. And then the ideation process in and of itself is relatively easy.
Yep.
So people write down what they think, they fill in different categories with post-its, whatever it might be. But then once that's up on the board, those things get organized into categories and reorganized and put in relation to each other. And that's when the participants in the workshop start talking to each other. And then you, as the researcher facilitating that conversation, need to capture effectively those insights, those conversations. And on the basis of that, you can give a report back, which let's say there were 5 potential markets.
Yeah.
Okay, so we know what the hard economic indicators say the potential is. We know what the academic literature says about the regulatory environment, or what the regulatory environment, the actual regulations are, and what needs to be paid attention to there as experts in the financial services industry. So I would have at least one colleague from our Institute for Finance in that room as well.
Yeah.
And they would probably contribute an assessment of the regulatory environment in each of those potential markets. And then you have that experiential knowledge. And all of those things combined provides an information basis for the decision makers to then compare the markets in terms of potential and pros and cons, or opportunities and challenges outside of the economics of the market potential.
I imagine that this approach might be used by consultants. For example, the Big Four, they might do something like that to assess the potential of new markets.
Yeah, I think so too.
Yeah. Okay.
But the interesting thing about this is, and I know this because we've done this for digital transformation. I participated in the work that Mark Peter did on digital transformation. He created all kinds of tools to support the digital transformation of Swiss SMEs and other organizations like charities and also sports clubs, etc. And developing a roadmap and a series of tools to facilitate those conversations that I just described enables organizations to even do it themselves.
Yeah.
The interesting thing is that, for example, a fintech firm might decide that to facilitate the conversation effectively and to break out of, let's say, organizational structures, both formal and informal relational structures in the organization, and to force people to have new thinking, it's useful to get a third party in the room. So mostly the approach can be created and passed on, and the managers could do it for themselves. But very often they would actually prefer if it's facilitated, because it breaks hierarchies down. And for that afternoon and that day, everyone's just working on a problem, and the third party can. We would always say, look, today everyone's contributing equally. Whatever it is that the structures are that you bring with you, those get left at the door. And we're trying to innovate or be creative in terms of trying to identify the risks and the opportunities here, and everyone should contribute freely. Yeah? Of course, you can never get that entirely because people experience what happens in the room. So, I mean, I'm not naive about organizational relationships and politics and that stuff. But that's why we or a consultancy firm can be very effective for supporting that kind of internationalization decision making.
Yeah. I agree. And so would you recommend more like an independent consultant or a consultancy firm? Would that change something like the perspective, or?
Well, I guess what you have is that they, if you open up that door and you decide to go down that route, you essentially then have a continuum again from people who, like me, who are expert in the process or developing a bespoke service, in this case, which involves some research of the marketplace and doing pre-work. So preparing documents that give information on the market potential as we assess it for certain criteria, maybe saying what we know from the literature in terms of what seems to work and doesn't work for fintechs when they internationalize, just to put ideas out there for discussion as a pre-step, and then facilitating that kind of workshop conversation where we're not involved anymore. It's like the managers from the firm and the experts that are invited. It's the managers and the experts that we invite as complements to them that are driving the conversation and the output of the workshops. And then you have at the other end, you will have consultancy firms that can also do that process, that bring industry expertise and knowledge into the room. And the choice that the firm is making between those two options is that I think in the first one, there's more room for unexpected, let's say, non-normatively accepted assumptions about how the industry works when the person facilitating it is simply facilitating the process, versus bringing consultancy, which is essentially part of the industry ecosystem and will have internalized many of the assumptions and norms associated with how the industry works into what they do. But what they would bring is deep data. They would bring deep insight, probably quantifiable numbers for the different markets. And they would have access to the databases that could provide them that data.
So
and they would know the actors, they would know the potential partners, and who's working with who, and all of that kind of insider knowledge about the industry and industry dynamics in the foreign markets.
So that is really to include, according to you, in a framework for internationalization, to like sort of have this procedure, design thinking, collecting the necessary data, but most of all, having an external person assess, the markets, right?
Yeah, I mean, I think, no, I don't think that the external person should assess the market. I think a third party can provide data and inputs probably more efficiently than the about the marketplace in a foreign market than the fintech firm. Because they've got a core business that they're running. They're probably resource constrained anyway. But the assessment of the market attractiveness, if it's done purely economically, could be done by the third party, like as the point of departure and the ranking. But at some point, you also want to get an assessment from the firm about what matters to them and if they agree and how they would like that adapted. Once that's signed off, you can go into the next phase where you do the expert workshop or workshops, and you seek to ideate not a solution, but you try to ideate all of the potential risks and opportunities associated with that marketplace, ideally through the perspective of the firm that you're doing the work for, like in relation to that fintech firm. Because the managers, of course, will be able to then say, hey, you put that up there, but I don't think that's a problem for us. I think we can do that. But then they might say, oh, we've never thought about that strength that we might have or that opportunity in the marketplace. Yes, we can take advantage of that. And so in conversation, you can very quickly get to a rough, firm-specific description of the market attractiveness in terms of barriers and opportunities for operating there. And then you have a completely different basis on which to make the decision about whether to enter that market at relatively low cost.
And that gives me a lot to think about. Just to close, one last question. Would that make sense to you, a framework that is specifically designed for fintech internationalization, or that's too broad because each fintech and especially each sector of fintech must have its own strategy? Do you think that would make sense?
I think you can create a general framework for enabling managers to do the necessary work to effectively assess foreign market attractiveness, both in terms of economic attractiveness, but also in terms of barriers and enablers of their entry into that market. I have an initial example of this on ResearchGate, where I build on some of Gemmerwood's work, but also other scholars for SME internationalization. And for the workshop-based approach, I actually have a paper with some colleagues, with Franz Bayek and other colleagues from a few years back on business model innovation for the electric utility industry in Switzerland.
What is it called? Sorry?
I'll send it to you.
Okay.
I'll send it to you afterwards in an email.
Thank you.
I forget the exact name of the paper, but it's with Franz Bayek, Martin Soland, Julia Koch, and myself. And there we show how it's about identifying market segments. But the really interesting thing about the market segments were done with two different methods. One was survey-based. So first focus groups and then a survey-based validation of customers, descriptions of market segments. Okay, so that's the one way. And the other way was an expert workshop-based approach for developing market segments. And it's this is the thing that opened up my eye, totally changed my way of thinking about expert-based workshops for this kind of work. You'll be surprised by how close those market segmentations are at the end of that process. Yeah. And there's a lot of knowledge that experts out of the industry and experienced managers within the sector that have spent a significant time dedicated to working in that sector and have also got experience of international markets. Like the knowledge and data and experience that they carry is immensely valuable. Yeah. And you want to develop a process which relatively quickly enables that to be put to work without spending too much money.
Yeah, it's a very interesting view, actually, the workshop-based decision making. I think I will have to look into that and into your paper.
I'll send you a few links to some resources.
Yeah, that would be great. Thank you. Thank you so much. Well, I know we're getting close to the end. I don't want to take much more of your time, but anyways, it was very insightful. So thank you for that. I think I have a lot of things to work on now. And if you're interested, I can send you my thesis at the end. So that would be near end of August, September, maybe, if you're interested.
I am interested. That would be wonderful.
Okay, great. And if you should I send you the recording of the?
I would love to have a copy of the recording.
Yeah.
If you like, you can just put it on a server somewhere. I can download it. Whatever works for you. I think it'll be far too large for an email. So
I think I will do a Swiss transfer if that's all right. Yeah. Okay.
Fantastic.
Great. Well, thank you so much for your time, and I wish you a nice afternoon.
Yes, you too, Claire. Good luck with the research.
Thank you. Thank you. Okay. Bye.
Bye-bye.